Hello, everyone, and welcome back to another episode of MultiFamily with the one and only Veena Jetti. Thank you for coming today, Veena.
Thank you.
And today we're going to talk about why we love multifamily. So the top benefits that we have seen in multifamily.
Yes.
So first of all, equity. I feel like every investor looks at equity when it comes to passive income. So tell us about the equity on multifamily.
Yeah, so multifamily allows you to take, so to be fair, you can invest in debt also on multifamily. It's not a one size fits all. And I actually think most prudent investors invest in both equity and debt. But what's really cool, I just made a really loud noise. I almost broke the table. I'm so excited to talk about multifamily. One of the really cool things about equity in multifamily is you have the ability to really grow your equity in a short amount of time. And so being able to add more equity means that you can really boost your wealth and create generational wealth through multifamily investments.
And it's a stable growth as well. Yes. I mean, despite all the many crazy changes that you can see in the market that are affecting other investments, you can see a stable line of growth when you are investing into real estate, in this case, multifamily specifically.
Yeah, depending on which asset class in multifamily, which sub-market, et cetera. But generally speaking, if you're invested in a really great asset, you can see not just linear growth, you can see exponential growth. The ability, especially historically, right, in the last few years, we've seen investor equity almost double in a very short amount of time. Now, I'm not saying that's always going to be the case, and I'm not saying it's definitely going to happen or anything like that, but the potential for it to happen in multifamily certainly is there.
Now, another of the benefits that we have seen is that the cash returns are amazing.
Yeah.
So, because in comparison to other investment strategies, you don't generate that much cash flow as if you do it in multifamily.
Yeah, it's funny that you say that because I think that cash flow has been eaten up by interest rates increasing so quickly. A lot of assets just are not underwriting because the cash flow is not there or it's very low. So in today's market, we're seeing much less cash flow than we have historically. But it's still a solid return because when you look at the cash on cash after the exit of a value add asset, in today's market, you could see anywhere from 13 to 16, maybe 17% on a pro forma would not be unusual. Obviously, a good sponsor is going to try to underpromise and overdeliver. But like I said, on our last exit, we had over 50% return. So 50% annualized return. It means you give me $100, I'm going to give you $150 back within a year. That's a very solid return. Now, you can do that at scale. That's amazing. Now, like I said, I would definitely not plan for that. I think, 13 to 17% is probably more accurate, maybe 13 to 16, 13 to 15%. But I would say cash flow has definitely decreased, but there's still cash flow that we're seeing on assets. Historically, maybe we saw 8 or 9%, then we saw 6 or 7%. Now we're solidly at 4 to 5%. But again, this is risk adjusted. So the more risk you take on, the more cash flow you probably will see during the hold period. Because we're in Class B value add multifamily in core markets, we're usually seeing anywhere from 4 to 5%, maybe 6% in some cases, as kind of our average, which is still solid cash flow, especially for a passive investor.
That's right. And especially for all of those passive investors out there that are just looking for a little bit of money coming, in this case, quite a bit of money coming every single month on their paychecks or bank account.
I mean, it's a paycheck. Yeah. Essentially, it's a deposit, a direct deposit. Yes.
On their bank account. Yes. I feel like it gives them that peace of mind as well.
Yes.
Because even if you have one or two of your tenants that decide to not keep leasing your space, you still have all the other ones that you can rely on. Yeah.
Overall, it's the overall health of the asset that we're really looking to. It's not necessarily any one unit or one tenant. We're looking for overall, how does the asset do and how does the asset perform? And I would say for investors, the irony is the most astute investors and the wealthiest investors in our project, they don't care about cash on cash very much, actually. They would be fine generating 0, 1, 2, 3, 4%. They don't care about it that much. What they really care about is the IRR and what the overall return is and how quickly they generate a larger return. That's what they're looking for. So I think it depends on who you are as an investor and what you really care about. Based on that, you can then make decisions on whether, multifamily is the right investment for you or not.
Another of the advantages that I have seen is that you get unique tax advantages. So what are some of those that you have been able to implement within your assets?
Yes. So one is being able to utilize depreciation. Bonus depreciation is a big one. 2022 is the last year that we can take 100% bonus depreciation. In 2023, that goes down to 80%. Then 2024, it goes down to 60, then 40 the year after, then 20, and then it completely phases out.
Oh, wow.
So right now is the most, yes, it's the most tax efficient time to be invested in multifamily real estate. Now, with that being said, there's also something called a 1031 exchange. That is going to allow us to defer our capital gains when we exchange one asset for a like kind asset. And I'm not a tax advisor. I have no licenses. So make sure you get a tax professional to help you with this because it is very complex and you want to make sure you're following the IRS rules. Otherwise, you will be challenged or not. It'll be a disallowed transaction and then it causes all these tax implications and your investors will be mad and blah, 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 blah. So the point is get a tax professional and a tax attorney to help you with this. But you can use what's called a qualified intermediary to help you with a 1031 exchange. And what happens then is you can defer your capital gains taxes and kick the tax can down the road. So you don't have to pay those capital gains immediately. You can defer it until the next asset. And the beauty of the 1031 exchange is that you can continue rinsing and repeating to allow your funds to grow tax efficiently. Without having to be cut off that big chunk of money that you would get on the profits of selling. Exactly. Because we know $1 today is worth more than $1 in the future, right? We want our money back as soon as possible, which is why the IRR or the internal rate of return is so important to investors because it takes into account the time value of money. It takes into account when that dollar is returned to you, not just that the dollar is returned to you.
That's true. So within your career, what are some of the other benefits that you have seen from investing into multifamily?
Yeah, so I think the biggest benefit is if you want to be truly passively invested, multifamily really, and the way we're structured, really allows investors the opportunity to be truly passive. So what I mean by that is, let's say you don't want to know which markets you want to be in. You don't want to know what the value add opportunities in any given area are. You don't want to know what the rents are. You don't care about that stuff. You just want to collect mailbox money. You want truly passive income. Multifamily is a great way to do that at scale with a risk-adjusted return. If you're in single family homes and you become like a short-term rental landlord, or even if you have a long-term rental, right? You're still dealing with your tenants. You still have to be somewhat active. It is not passive income. But in these private placements, it is truly passive income because you have someone like me who is an active investor or an active sponsor that will come in and will handle all of the heavy lifting. We'll underwrite the deal. We handle everything from cradle to grave. So we go from A to Z on the asset, from sourcing it, underwriting, negotiating it, putting the offer together, stacking the capital, raising the equity, raising the debt, operating, executing. We do everything, right? So all you as a passive investor have to do is vet us as the sponsor, vet the opportunity, make sure it's appropriate for your portfolio. And ours are only open to accredited investors. So if you're an accredited investor, you give us the paperwork proving as such, you sign your documents, you wire your funds, and then we start making deposits into your bank account automatically. We do an electronic deposit every month. So we handle everything. We send you, your monthly updates. We send you quarterly financials, pretty easy peasy, and it truly is passive.
That's right. And I feel like it also gives you the opportunity to have that peace of mind because some of our viewers, they may want to have still their job, like their current job,
absolutely.
But they can do this totally on the side without having to worry about the performance of it because they're getting the reports that they need.
Exactly.
And I feel like that's not the case in let's say, a franchise. You have to be looking at every single detail.
Yes, you have to be active. And, I'll say too, as a passive investment in multifamily, it's still tax advantage. It's very tax efficient because you get a negative K1, which allows you to take the depreciation benefits. So it's important to note that it's a tax efficient investment too.
Even if you are passive or active, you always have those benefits.
Yep.
Awesome. Now, why do you, Veena, love multifamily? Because I know that there are multiple benefits, but what does multifamily mean to you?
I love multifamily for many reasons. If you can't tell, like, I'm totally biased to multifamily. It has the highest Sharpe ratio, which means it has the highest return for the least amount of relative risk, which is always great. I'm a pretty conservative investor, so it's conservative investment that is appropriate for my portfolio. I love it because it creates generational wealth, and you can get to scale very quickly with it. And like a little bit more of a personal note about why I do what I do. There's very few women or minorities that are operating at the deal size that we operate. And so for me, I have 2 young daughters. I have 3-year-old twins. And it's important for me that they see diversity and representation at the top levels, not just in the space, at the administrative level, but at the top level where decisions are being made, where deals are really being done. It's important to me that they see someone that looks like them, that has a seat at the table, so that they too believe it's possible that they can do that also. And so that's like my personal note of why I continue doing what I do, is the legacy for my family and my kids.
That's right. And I feel like it has opened the doors of so many opportunities for you and your family to grow financially, to grow together, and to also have a different perspective of what the future looks like for you.
Yeah, absolutely.
And thank you so much again. And thank you to our audience. So like, there are so many different opportunities that can be open to you if you start in the business of investing into multifamily.
Yes.
So open those many doors to your future. We're going to see you in the next episode. Bye-bye.